Let's break down the foreign exchange market. Forex, the world's largest financial market. Trillions of dollars are traded daily, making it bigger than all stock markets combined. But it's not just for Wall Street. You've likely participated if you've ever traveled abroad or shopped online internationally. Forex is simply exchanging one currency for another, like swapping dollars for yen in Tokyo. This market isn't a physical place. It's a global network operating 24 hours a day, 5 days a week. Globalization fuels its size. Companies, investors, and tourists all need to convert currencies for trade, investment, and travel. Every international transaction, buying goods, investing, or booking hotels, relies on Forex. Without it, global trade would stall. Currencies don't have fixed values. Their prices constantly shift based on supply and demand. These fluctuations create opportunities for traders and investors to profit. They buy currencies they expect to strengthen and sell those they think will weaken. This speculative trading is a huge part of daily Forex activity. The market's size and volatility make it dynamic, exciting, and risky. Understanding Forex is the first step to seeing how money moves worldwide. Let's dive deeper into who's actually moving all this money. The Forex market is a diverse ecosystem. Major international banks like JP Morgan and Citibank are the biggest players, providing liquidity and handling massive trades for clients and themselves. Multinational corporations, such as Apple, constantly exchange currencies to manage global supply chains and hedge against risk. Governments and central banks, like the Federal Reserve, intervene to influence their currency's value and stabilize their economies. Their actions can ripple across the entire market. And then there are retail traders, regular people accessing Forex through online platforms. While individuals trade smaller amounts, their collective activity is significant and growing. Retail traders speculate on short-term price movements, reacting quickly to news and trends. Each group has its own motives, but together, they keep the market moving. Whether it's a bank, a business, a government, or an individual, everyone's playing a part. This mix of participants makes Forex uniquely dynamic. Now let's see what actually moves currency values. How do exchange rates change? Currency values are set by supply and demand. No secret committee, just the market at work. If more people want a currency, its value rises. If more want to sell, it falls. Currencies are traded in pairs, like EUR/USD, so you're always buying one and selling another. The exchange rate tells you how much of one currency you need to buy another. Rates shift constantly, reflecting global economic activity. Key factors: economic health, interest rates, and political stability. Strong economies and higher interest rates attract investors, boosting currency demand. Political stability supports a currency. Turmoil or uncertainty can cause sharp drops. News, economic data, and even natural disasters can trigger rapid changes. Traders watch these signals to predict where currencies are headed. Next, let's learn the language of Forex. To navigate Forex, you need to know the basics. The bid is what a broker will pay for a currency. The ask is what they'll sell it for. The difference is the spread, the broker's fee. A pip is the smallest price change, usually the fourth decimal place. Lower spreads mean lower trading costs. The most traded currencies, the majors, include the US dollar, euro, yen, pound, Aussie, Canadian dollar, and Swiss franc. Trades between these have high liquidity and low spreads. When you go long on a pair, you're betting the first currency will rise. Going short means you expect it to fall. You can profit whether currencies rise or fall, one of Forex's unique features. Understanding these terms is key to following the market. But why does any of this matter if you're not a trader? Let's find out. Forex impacts your daily life, even if you never trade. Exchange rates affect the price of imported goods, gas, and electronics. A strong dollar makes imports cheaper, but can hurt U.S. exporters. When central banks change interest rates, it shifts currency values and impacts your travel costs, investments, and even job markets. Understanding Forex helps you connect global news to your wallet. If you travel or work abroad, knowing how exchange rates work can save you money. You'll avoid bad exchange rates and unnecessary fees. Financial literacy about Forex empowers smarter decisions at home and abroad. You don't need to be a trader, just knowing the basics gives you an edge. The Forex market reflects the world's economic health and connects us all. It's a vital tool in your financial toolkit.